AI is now giving stock picks, portfolio advice, and even retirement planning tips. Sounds next level, right? But here's the danger. Trust it blindly and you could lose serious money. I've helped millions improve their finances, and I'll expose the biggest pitfalls of using AI for investing, and more importantly, give you actionable strategies to protect your investments and seize real opportunities using AI. Stick around because one small error here could mean the difference between building real wealth and watching your savings disappear. The first danger: AI always sounds confident. You ask it a question, and in seconds it gives a polished, professional-looking answer with neat charts and lists. But here's the hard truth: a polished, wrong answer is still wrong. AI doesn't truly understand markets, it only processes patterns in data. And when data is missing or messy, it doesn't stop. It makes up something that sounds right. These hallucinations are an investing nightmare because you might act on fiction without even realizing it. Imagine asking, "What are the risks of this new fund?" and AI casually lists 3 risks that don't exist in the official filings. Sounds legit, but you just based a real money decision on made-up info. Bottom line, don't mistake confidence for correctness. Here's the part almost everyone overlooks. AI is only as good as the data it's fed. Accurate current data can give you useful summaries, but outdated or biased data, that poisons the output. Think of a calculator. If you punch in the wrong numbers, it gives the wrong answer confidently. AI works the same way. Let's say you ask AI to compare 2 mutual funds. It says Fund A outperformed Fund B by 10% over 5 years. Sounds impressive, but what if it ignores the much higher fees? Suddenly, that better fund leaves you worse off. Bottom line, always assume the data could be incomplete and double check. And here's the catch no one talks about. AI is great with patterns in past data, but when it comes to current events like regulatory changes or lawsuits, it stumbles. Ask it about a company's health, and it might summarize revenues perfectly, but it could skip over a pending lawsuit or product recall buried in the fine print. That missing detail changes everything. And here's the scariest part: AI won't tell you what it missed. It just presents a clean, confident summary, while critical risks stay hidden. Bottom line, never assume AI showed you the full picture. Ready for the part that changes the outcome? Now that we've uncovered the dangers, here's how to avoid them. You don't need to ditch AI, you just need guardrails. Follow these 3 simple habits. Always ask for sources. If AI can't show you where its information came from, don't trust it. Spot check at least one number. Open the original source like a company filing and confirm a key detail yourself. Use AI as a starting point, not the finish line. Think of it like Wikipedia. It helps you start research, but it's not the final word. Remember, AI can save time, but it's not magic. Treat it like an unpaid intern, not a financial advisor. It can collect notes, sort data, and save you time, but would you let an intern sign your mortgage papers or pick your retirement plan? No way. They gather the notes, you make the final call. But this is only half the story. You can use AI for real wealth building if you use it strategically. Watch the video on your screen to see how AI can take your returns to the next level.